Yes, guys, a very good morning and welcome back to another daily market outlook with the major dollar pairs and, of course, gold. So, with that said, let's dive straight in. Looking at the dollar index for the day ahead, where are we currently situated? Of course, you guys know I always like analyzing the dollar index because it's heavily correlated to euro dollar, which is pretty much my main pair that I trade. So, starting off with the dollar index is currently located inside this demand zone. It's not fresh. However, we have now liquidated this low, which is also our structural swing low here on the 4-hour time frame. So this is your low and this is your swing high over here, and in between pretty much everything was a pullback, as we can clearly see back in the days around, what was it, the 6th of October, we pulled back in towards the 618 fib and in towards this area of demand and pushed back up. However, news of course has been driving the dollar index down, especially with the uncertainty surrounding the dollar with, for example, the US carrier, which is located near Turkey. There's a lot of uncertainty around what the United States is going to be doing next. So therefore, people are, as far as I can see, not being very bullish on the dollar despite the uncertainty in the world. So for the day ahead, what I'm looking for is, okay, can we close below this line of 105.658? If we close below it, it means that we've seen a break of structure, and I do definitely then expect a further push down in towards 105.191 with this beautiful liquidation low over here. Why am I targeting that low? Well, of course, we have kind of like this consolidation area right over here. And these areas of consolidation, they act as your area of supply or demand. As we can clearly see, we are already tapping in towards this area of consolidation for the second time, meaning that it's not fresh anymore, meaning that there's less demand inside. Therefore, the probability of us moving further in towards the downside is higher. Next to that, of course, if we see a break of structure on this structural low, then there's a higher probability, once again, that we're going to see a further push down. However, if we do see a very strong reaction towards London and New York session, with a strong fake out on the low, then there is of course a probability of us just moving up higher. That this was the liquidation of the low. We moved all the way in towards the extreme of this swing range between the black lines, and the dollar index will then head up higher. Quickly, just looking at the daily as well. As we can see, we took out, of course, this area of supply. We wicked above it. However, sometimes still the supply zone does play out. We do have this very strong daily trend line, which we've been following up in towards the highs. If we are able to break it for a second consecutive day, then there is, of course, a higher probability of heading towards the downside. We have already seen a daily change of character, guys, on this low, meaning that there is some kind of like tail signs that the dollar index is ready for a deeper correction. And then, of course, the first target that I have is based on that 4-hour zone with the liquidity and, of course, the break of structure over here, which is once again 105.191. After that, of course, there are many more zones which we'll be discussing in the next daily market outlooks. But for example, over here, this is another very beautiful zone. Why is that? Well, it's a very clear area of consolidation. Next to that, we have once again a beautiful liquidity low, which is still fresh. So this is 4-hour liquidity. With all of these equal lows pretty much right above it, meaning that there's a lot of liquidity underneath it, fresh area of demand, so that's then the demand zone that we're going to be targeting. So that's the dollar index. Moving on in towards Aussie dollar. So AUDUSD, what can we expect for the day ahead? Well, as we can see, pretty much this area of supply is still holding. Looking at the 4-hour in general, the 4 hours, of course, bearish, the daily is bearish, so we do favor, of course, those shorts. However, for a very beautiful short to start playing out, what do I want to see? Mainly, we're going to need, and sorry, I have my drawing things on. What I want to see is mainly for this low to go. Then we, of course, have a 4-hour change of character. As we can see, consecutive highs. So high, higher high, higher high, higher high. Now we want this low to go because this is the low where the higher high started originating from. Then as well, if we move down, for example, in towards the 1 hour, then you'll clearly see, okay, this is a structural low that needs to break. Why is that? Well, if we look at structure in a very mechanical way, we can see a push up, pull back, push up, pull back, push up. So this is the lowest point which was able to break this high, meaning we now want that lowest point to go for then high probability shorts to start playing out. Of course, once again, 4 hours bearish, daily is bearish, so there is a high probability for shorts. We are located inside this daily imbalance candle, which took out this low over here. The daily is also a bearish change of character wise, so therefore shorts are high probability. Please do not get me wrong. If you want to be slightly more aggressive, just start monitoring the 15-minute. Then on the 15-minute, you'll see, okay, this low is the same low as on the 1 hour. So let's just wait for that to go for the safest trade to play out. If you are more aggressive, you can already start trading from this area of supply, which is playing out very beautifully now. Why is that? Well, for example, you could characterize this as a pullback, push up, push down. So that means break of structure, then push up again in towards supply. As we can see, played out beautifully, push down again. So another break of structure in the sense that we just wicked below this lowest wick. Then once again, you could have traded, for example, from here, but then you would have taken a loss. Then this is a break of structure again, for example, pullback, break of structure again. So you can kind of see both approaches have kind of like their pros and their cons. However, the way that I just see it, and which will provide you with the most certainty in trading, is that this strong low needs to go. Once that low goes, then you'll have the highest probability shorts, wait for the pullback, and then wait for that next short to start playing out. However, if you are already kind of like looking, for example, for an aggressive short, then I would say, okay, look, boom, we wick below this wick. So that's kind of like characterized as a break of structure. Okay, we saw a break of structure over here. Push up, push down, another break of structure over here. Let me just draw the break of structures. So that means break of structure, break of structure, break of structure, now break of structure here. So therefore you could have shorted this area of supply, wait for that new break of structure over here. And the break of structure, you can already see it as a wick break, and then just wait for a pullback. So if Aussie dollar now aggressively sells off, that means that this becomes your supply zone, this buy before the sell candle, and from there you can then look for new shorts. So just keep that in mind. If we do move up higher, then of course just follow the overall 15-minute swing trend, and then you could of course just wait for the market then to, for example, break this low after breaking these highs, for example. So just keep that in mind. That's pretty much how I'm viewing Aussie dollar at the moment. I know that there is still fresh supply up higher, therefore I'm not really being too aggressive with Aussie dollar and waiting for that 15-minute structural break. Then I'm more than happy to trade the entire Aussie dollar all the way back down in towards that 0 fib. Now, euro dollar, of course, one of the most interesting pairs. I'm sorry guys that the market outlook is taking quite some time. But looking at euro dollar, what can we see? Well, we can clearly see that we had a 4-hour break of structure. We had a close above the highest wick, which broke the previous week low over here. Meaning that at the moment, this is your weak low, or your strong low, excuse me, and your swing low. And this over here, as far as I'm aware, is going to be your swing high. So even despite it not really being the cleanest of impulses, this is your entire impulse in towards the upside. Now, euro dollar itself is very messy at the time. Not a big fan. We have this area of supply now pushing price down and suppressing price and keeping it from moving up higher. So we could definitely start seeing further downside. Of course, after 4-hour break of structure, we do expect a pullback. We have supply. Therefore, a pullback is not, of course, very crazy or out of order. However, there are not really that many clean areas of demand that I'm favoring. Pretty much the first clean area that I'm going to be looking for is kind of like this area of supply or demand over here. However, if you draw wick to wick, you can see, okay, we already took it out. Again, if you want to draw, let's say, this as your demand zone, again, you can see, okay, we already took it out. So that could also mean that price can just fall in one go all the way back down in towards this fresh area of demand. And from there, the high probability longs are going to be coming in. Now, just monitor the 15-minute time frame, because on the 15-minute over here, if we just look again at swing structure, this was your swing low, this was your swing high. This was your swing high, this was your swing low, this was your swing high, this was your swing low. So now if we break this low over here, that now means that we have a fresh area of supply. We have that 4-hour break of structure. After break of structure, we expect a pullback. So I am going to be looking for euro dollar shorts today if we do break this low over here. And after that, see a pullback in towards this fresh area of supply. However, you guys know, probably if you've watched my videos for a longer time, if we kind of have a clean impulse in towards the downside, there's no liquidation happening inside the move in towards the downside. So therefore, you do want to kind of like see some range created with equal highs and then the sell-off. So just keep that in mind. But yeah, that's pretty much it on your dollar. So potential trade, I guess, towards the end of London session or potentially the start of the New York session. So moving on from your dollar into pound dollar, because pound dollar also saw some interesting price action yesterday with a break of structure over here. So as we can clearly see, pound dollar has pretty much been following demand flow. Again, same as on euro dollar. The only fresh area of demand that I'm really interested from trading from is this area of demand over here. So pound dollar, GBPUSD, waiting for potential pullback, of course, after break of structure. However, yeah, again, not really any very clean areas of demand. You could kind of like refine this one over here and then say, okay, this is your liquidity low. So then moving down in towards the 1 hour, do we have anything clean over here? No, we do not. Again, pretty much demand flow has been in control the whole time. What do we mean with demand flow? Again, this is the only fresh area of 1 hour demand. So this is also aligned with the 4 hour area of demand, which I just showed on the 4 hour time frame. If we look at it here from a 1 hour perspective, you can see, okay, demand taken out. Then again, if you consider this entire sell before the buy, again, you can see pop out, pop back in, demand taken out. Then again, sell before the buy, you can see pop out, pop back in, demand. So that means that this pretty much your sell before kind of like this buy, of course, in towards the highs, we pop back in, we start popping back out. Now we're moving in towards it deeper. Therefore, it could mean we're just going to start selling off on pound dollar back down, for example, towards this 1 hour fresh area of demand, which is also, again, aligned with that fresh 4 hour area of demand. And if we also draw on a premium versus discount tool, you'll see that's around the 50% mark. Yep, it is. So if price pulls in towards there, I'll be happy to start looking for longs. Again, on the 50-minute time frame, I'll be happy to look for shorts once we take out this structural low over here, because this low took out this high. And then again, just start looking for those potential shorts further in towards the downside before then looking for longs. We're inside the premium, so happy to look for those potential shorts. Next is Kiwi dollar. So NZDUSD, what do we expect? Well, we moved up higher, took out this area of supply, but didn't see close above it, meaning that there's no break of structure. I analyzed Kiwi dollar yesterday for a long time, and Kiwi dollar is bullish on the 4 hour. Daily structure is very messy, so just focusing on the 4 hour for now. We can clearly see that this demand chain has been in control for a very, very long time. The reason I was looking for a short from this 4 hour area of supply was in fact because we could trade it back down in towards this sell before the buy. As we can see, it was pretty much a good option. You were able to grab some pips from this move, for example, over here, around 30 pips, nothing really that interesting. So probably like a break-even trade, but again, you can kind of see pop down, pop back up. So again, this is your area of demand, which is holding for now. If we are able to take out this low, it means a change of character on the 4 hour, and then I'll be happy to look for shorts. So all these dollar pairs are aligning very similarly. All of them kind of like want to see that change of character happen on the 4 hour. And if they do, then I'll be more than open to look for those shorts in towards the downside. Same is for pound dollar. Again, let me just quickly see. Yeah, so this bearish candle over here is called an inside bar. So that means that the high of this bearish candle failed to break the high of this bullish candle, which in turn means that this is your change of character low. So once that low goes, then I'll be happy, and that's also your 50-minute swing structure low, so don't worry about it, just focus on the 50-minute. But once that low goes, then I'll be happy to look for shorts. So yeah, I think a very clear analysis in that regard. Last of all, gold. What do we expect from gold? So gold moved back in towards this area of demand. Kind of mentioned it yesterday, looking for higher prices on gold with uncertainty in the world. Reason that gold is flying up so hard is because also the dollar is going down so hard, so everybody's moving their money into towards gold. Kind of the next 4 hour zone that I'm keeping my eyes out for is pretty much where we're located in right now. That is over here. If price does not find any resistance within this 4 hour area of supply, which is pretty much also this last daily wick, 1901 is going to be inbound. So what I'll then start doing is that if we pop and close above this area of supply, I'll just be looking for a 15-minute entry to trade it up even higher. For now, yeah, you could look for potential pullback play with us entering that area of supply. However, shorting gold is just very risky. But of course, what you can look for is, okay, structures like this. So wait for that break of structure on this high. Then, for example, wait for a change of character on the 15-minute stacked with that 4-hour area of supply. Look over here to your left for a 4-hour clean area. So that is, for example, from this low, but again, it's very similar to what I just showed you guys on the 4-hour. But that's pretty much what we're entering now. So yeah, it's risky, but preferably, again, what you would want to see is kind of like a change of character low, and then you could trade it back down before looking for longs again from fresh demand. That is the riskier option. So maybe just stick to looking for longs upon a pullback in towards demand over here, in line pretty much with the 4-hour outlook that we can move up higher, excuse me, the daily outlook that we can move up higher, back up in towards that 1900 region, which is going to be a perfect pullback play for the overall gold move. So that's it for today, guys. Thank you so much for tuning in. If you have any questions, just make sure to join the Discord server, link in the description down below. Thank you all and have an amazing day.